Let's get ready to mortgage. He is the prince of programs, guru of guidelines, master of matrices. He puts the fun in funding. Please welcome Mark, Mr. Mortgage Eitel.
All right. My name is Mark Eitel, and you are listening to the Mr. Mortgage Show. And guys, you're in the right place if you want the data, not the headlines. You hear me say it all the time, but the data, the tips, the tricks, the strategies, the answers to your questions so you can go out there and make better real estate and mortgage decisions for you and your family. You are in the right place for all of that. Sit tight. Man, we got a great show lined up for you this week. I was deep diving some data, and I think you will be pleasantly surprised by what we talk about this week. But as always, I'm excited to join you. Thank you for spending a little bit of your day with us. You hear me mentioning we and us all the time. That is because I cannot do this alone. I am joined by Jen, my lovely producer, who womans the Anytime hotline, runs the board, answers your phone calls, your emails. She just keeps this whole train rolling. So, hey, Jen, how are you? How was your week?
I had a great week, Mark. Thanks for asking. How was your week?
Yeah, I had an awesome week too, and I am super excited to dig into this show. If I sound caffeinated, I am 2 cups in, and I was reading a ton of data this week. Hey, this all started because of some conversations I overheard at breakfast the other day. I was on my way to meet a friend of mine for breakfast, and he called me at the last minute and couldn't join me. And I thought, you know what? I'm just going to go. I'll go by myself. I sat in there and I just listened to conversations that were happening around me. And yes, I was the creepy guy just eavesdropping. I happened to listen to a conversation that 2 young gentlemen were having about the economy, about the housing market, what the headlines were saying. They've got these, big dreams about being real estate investors, and they're going to swoop in August of 2023. And somebody published a video on TikTok or social media that tells them that's the time to jump. And I was listening to their strategies, and man, super excited about their enthusiasm, but their data was really misguided. And it was pretty clear they didn't have the data. They were just kind of parroting back to one another the different headlines they had read or the different news stories they had heard. A lot of social media influence. They kept referencing somebody they follow on TikTok. But anyway, my point is that they didn't have all of the information. And I'll never forget, I was in the airport in Atlanta flying out to a conference pre-pandemic, and it was back when everybody was saying things like circle back and the optics are bad and we need to change the narrative. And all of a sudden, those words became everyday vernacular. And I was sitting next to somebody, we were waiting for the plane, and he was clearly in a management position, some type of sales organization. And he literally vomited catchphrase after catchphrase to whoever he was talking to, and there was zero substance in the conversation. We need to circle back on this and change the narrative because the optics don't look good. And I just thought, wow, is that how normal people communicate? And then I heard this conversation at breakfast, and I guess it is. It's just startling to me because if you don't take the time to dive into the data, you really have less than half the story. You just have that outrageous headline that, and the headline writers, it's got to be difficult now for headline writers because everything has become so sensationalized. I mean, we've got split-second attention spans because we scroll our way through life on our phones. And I get it. I understand why the headline writers need to be so dramatic. It's sad that people are out there making big life decisions based on bad data. So anyway, I'm going to dive into all of that right now. What I did was I looked at the median home price back to 1940. I looked at the population of the U.S. in the same time period. And then I looked at construction starts. And where I'm going with this, guys, is supply and demand is the only thing that controls prices. Absolutely the only thing. Not interest rates, not the cost to build a house, nothing other than supply and demand. And if you think I'm crazy, just remember back 2 years how much you were paying for toilet tissue and how much you were paying for hand sanitizer and where you were buying that stuff. And if you're as old as me, think all the way back to Tickle Me Elmos and Cabbage Patch Kids. Those things were sold in parking lots like drug deals. You pull up into a parking lot, A guy pulls up next to you, he pops his trunk, there are 20 Tickle Me Elmos in there, and you peel off your crinkled 20s and you fan them out, and you've got your $300, and you're driving home with your kid's Christmas present out of the trunk of somebody's car because Tickle Me Elmos. Google that if you're too young to remember that, because that happened to me. I bought a Tickle Me Elmo in a seedy part of town, but anyway, that was supply and demand. Those things, there was a crazy amount of demand for them, and people went to Toys R Us and bought everyone off the shelf and capitalized on resale. The same thing happened during the pandemic. The same things happened in the real estate market. In any market, if more people want to buy it than want to sell it, it goes up. If more people want to sell it than want to buy it, it goes down. So anyway, let's dive into this data set because I find it fascinating. In 1940, the median home price was $2,900, $2,958, under $3,000 you could buy a house. In 1950, that number jumped to just under $8,000 at $7,950. In 1960, just under $12,000, came in at $11,900. And that was with the beautiful linoleum floor and the bright orange Formica countertop. In 1970, that number jumped to $17,000. In 1980, it was $47,200. In 1990, a big jump all the way up to $79,000. In 2000, it was $117,600. In 2010, we jumped to $221,800. And in 2020, which was the last year for this data set, $336,900. So you can see decade over decade, big jumps in the median home values. And guys, this was during recessions, during high interest rates, great markets, bad markets, low rates. Real estate jumped decade over decade in value consistently. So then I looked at how many people were in the country. So in 1950, which was the oldest census data I could find, was 148 million. In 1960, we jumped up to 176 million. In 1970, 200 million. 1980 was 223. 1990 was 248. The year 2000, we had 282 million. Then in 2010, we jumped over 300 to 311. In 2020, we were just under 336 million people. Now, here's what I find fascinating. And because I am a supply and demand nut, I wanted to see how many new construction homes were added to the U.S. housing inventory in relation to those population jumps. So we are going to cover all that. You hear the music. You know what that means. That's my cue. We'll be back in a few. Sit tight for a very short break. On the other side of this, we'll be back with the rest of this data and more of the show. We'll be right back. Hey, it's Mark Eitel, host of the Mr. Mortgage Show, and I'm going to interrupt this commercial break to ask you for a favor. If you have any friends or family or coworkers who are thinking of buying or selling or refinancing real estate, I'm hoping I can count on you to introduce them to me, to the team, to the show. We'd love to help them any way we can. Just simply share the link, mrmortgageradio.com, mrmortgageradio.com. Again, it's Mark Eitel, NMLS 1929005. Now, back to the commercials. Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com, www.reallyGreatAgents.com.
Here's another 5-star review.
We started our loan with a different company. They said we were approved, but at the last minute they told us there was a problem. I still don't know what went wrong, but thankfully our real estate agent told us about Mark. I was pretty stressed, but it's the perfect house, so we gave Mark a shot. He got it done. I'm not sure what was different, but I don't really care. We even got a better interest rate and with less money out of pocket than the first guy quoted us. It was a great surprise. Yes, I'm happy to recommend Mark and his Mr. Mortgage team.
Paradise is closer than you think. West Building Contractors can help you create your perfect piece of paradise. They have mastered the art of pavers, hardscapes, summer kitchens, pools, and more. For a free design consultation and quote, visit westbuildingcontractors.com or call 772-284-6994. West Building Contractors offer new construction, luxury additions, and remodels too. That's 772-284-6994 or westbuildingcontractors.com.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and you are tuned in to the Mr. Mortgage Show. And we do this each week right here, same time, same station. So just rip the knob off the dial. You don't want to be anywhere else. This is where you want to be. We're super excited to be with you. But you can call or text. You heard the man. Call or text. He forgets that part, but that line also receives text. 855-462-7292. That's 855-462-7292. You can get your questions on the air by calling or texting that number, or check us out online at mrmortgageradio.com. On the bottom of the page is an email icon. Click on that, and you can shoot Jen your questions via email. And she's already got some coming in back there. She's running around like crazy. She looks like an octopus, running the board, answering the phone, checking for emails. She's doing it all. Hey guys, you heard me leading into that break. We were talking about the data set where we looked at the median home price decade over decade all the way back to 1940. But then we looked at the spikes in the U.S. population, or the increases in the U.S. population decade over decade. And where I'm going with this is, do new housing starts outpace population growth? Because I'm a supply and demand nut. I say it all the time. And here's what I found super interesting. Every single decade, there were more new citizens of the U.S., either babies born or people immigrating to the country, than new houses being built. And from 1950 to 1960, we saw a 28 million person increase in the population, but we only saw 10 million new homes come to market. In 1970 to 1980, there was a 23 million person jump. And in that same decade, we built 12 million homes. From 1980 to 1990, we added 25 million citizens, but we built 12 million homes. In 90 to 2000, we jumped up 34 million people, and we built 12.14 million homes. So you see where I'm going with this. There's not one decade where new construction outpaced population growth. In 2010, we had 311 million people. In 2020, we had 35 million, 35.9. So roughly a 25 million person increase. And in that same decade, we built 6.9 million homes. Where I'm going with this is, if supply and demand control every pricing equation in the world, then it's logical to assume there is still supply pressure in the U.S. housing market, which indicates values are probably going to stay put or creep up slowly from here. Now, that's not to say some areas of the country are experiencing a slight pullback, but it's not a crash by any means. I mean, the entire U.S. housing market, you could take 20% of froth off the top, and all you're doing is resetting prices to probably late 2020 or 2021. It's not a crash by any stretch of the imagination. So guys, exhale. Not to mention, you've heard me say it many, many times before, what drove the housing market bubble of the early 2000s was easy money. There was false demand. You had people buying 6, 8, 10 homes with stated income, stated asset loans. So you had one person buying 10 properties and then one person trying to sell 10 properties. You need either 10 people or one person who wants to buy 10 properties to absorb that. You multiply that over the marketplace, and we were wildly oversupplied, and that's what drove the market down. And right now, we're not seeing that. We're not seeing people with, stated income, stated asset, interest-only loans buying multiple properties. That product just doesn't exist in the market. So this last housing cycle that we've been through was driven by genuine demand, not artificial demand. And we can dive deep into that if you want. If you have questions about that, just call or shoot Jen a text, and I'll go off the deep end if you want me to, because that's a very fun conversation for me. But if you don't want to do that on the air, check out mrmortgageradio.com, and you can listen to some of the back episodes where we talk in length about supply and demand. And the cost of money does not control the value of an asset. And I use an example where if you're buying an electronic device for $200, I just bought monitors for the studio. I think they were $350. So I take the box up to the cashier at Best Buy and I want to buy this $350 monitor. The cashier doesn't care if I use a high interest rate credit card or I pay cash or something in between. The price is the same. The cost of the capital used to acquire the asset had no influence on the cost of the asset. It's simply supply and demand. If there were a stack of monitors back there that they couldn't sell, I would have gotten a discount. If they're on a waiting list, I'm going to pay a premium. That's just the reality of things, guys. Supply and demand. Toilet tissue and sanitizer during the pandemic, Beanie Babies or Tickle Me Elmos back in the day. If you guys don't know what I'm talking about, Google Tickle Me Elmos. That was a pretty wild experience buying those back in the day. Anyway, I'm going to throw it over to Jen and we're going to dive into your questions. I just wanted to finish that up because I'm a big believer in supply and demand is where we need to focus if we're looking for downturns in the market. And right now, we are statistically still in a seller's market in most places in this country. So, hey, Jen, what do we have question-wise?
Sarah sent this one in. My lease is up in July. What should I be doing to be ready to buy in July? My credit is pretty good, and I should have 5% saved by then. Is there anything else I need to worry about?
Hey, Sarah, that is a brilliant question. Congratulations on getting started early, because a lot of people wait till the last minute and find out they could have done some things differently and gotten a better loan program. So with 5% down, you're going to be entitled to either an FHA loan at 3.5% or a conventional loan at 95%. So you're good there. Assuming that you've got good credit, don't do anything to change that. Don't go out and buy a car. Don't run your credit cards up. If you know what your scores are, do everything you can to keep them where they are. Again, no new debt, whether it's a car or a credit card. Try to continue to increase your savings. Once you get within 90 days of buying a property, you don't want any big deposits or any big withdrawals that can't be explained, because that's looked at. You're in great shape with 6 or 7 months out, and you're going to want to start your search probably around 90 days before your target move date. And in that time period, you'll have enough time to find the place. You'll have enough time to close on it, and you can set your closing date up in such a fashion that you're not making 2 payments in that last month. So my advice to you would be no new debt. Don't quit your job. Don't start a new career. Keep everything as consistent as it is right now. Assuming that you qualify right now, I would recommend that you do everything in your power to maintain your current credit, income, employment, keep saving money, and do yourself a favor. If you're planning to spend more money with your new property, let's say you're renting for $1,500 a month, but you're going to buy for $2,000, save that extra $500 a month. Pretend that you have that monthly expense right now, so you're ready for that additional expense, because a lot of people think they are, and they go into it and they're caught off guard. I learned that from my friend Jasmine, who is a mortgage banker in the Northeast. I thought, man, that's a brilliant strategy. Live the next 6 months as if you already own that house financially, and make sure you're comfortable in that price range. So brilliant question. I appreciate that so much. I hope that helped. If you need more info, you can always reach out, call or text, or shoot us an email. We'll get in touch and I'll be happy to walk you through any of the questions that you may have. Hey guys, you hear the music? You know what that means. That's my cue. We'll be back in a few. Sit tight on the other side of this break. We'll be back with more of the show and continue with your questions. Hey, it's Mark Eitel, host of the Mr. Mortgage Show, and I'm going to interrupt this commercial break to ask you for a favor. If you have any friends or family or coworkers who are thinking of buying or selling or refinancing real estate, I'm hoping I can count on you to introduce them to me, to the team, to the show. We'd love to help them any way we can. Just simply share the link, mrmortgageradio.com, mrmortgageradio.com. Again, it's Mark Eitel, NMLS 1929005. Now, back to the commercials.
Paradise is closer than you think. West Building Contractors can help you create your perfect piece of paradise. They have mastered the art of pavers, hardscapes, summer kitchens, pools, and more. For a free design consultation and quote, visit westbuildingcontractors.com or call 772-284-6994. West Building Contractors offer new construction, luxury additions, and remodels too. That's 772-284-6994 or westbuildingcontractors.com.
Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction, and that starts with a really great agent. If you've got a great agent, that's awesome, but if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com, www.reallyGreatAgents.com.
Here's another 5-star review.
We kept our business above water with credit cards during the pandemic. I'm glad we did, business is better than ever. But I didn't want to be a slave to those credit card payments. I called Mark about the REC loan he advertises. Long story short, we did a REC refinance and paid off everything, even the car. Now we only have the mortgage payment. We're saving a bunch every month. Yes, we are happy to recommend Mark and the Mr. Mortgage team.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and you are listening to the Mr. Mortgage Show. And guys, we do this each week right here, same time, same station. I am joined, as always, by Jen, my producer. She is womaning the Anytime Hotline. That number is 855-462-7292. That's 855-462-7292. You can call or text that number, questions or comments, to 855-462-7292, or check out MrMortgageRadio.com. Scroll all the way to the bottom of the page. That's MrMortgageRadio.com. There's an email icon there. Click on that and you can shoot her your questions via email. But I know we've got some questions stacked up over there. We started the show with a ton of data. And if you want to check that out again or you want to share the show, again, MrMortgageRadio.com has a ton of good info, but that top link goes to the podcast page. And the recorded version of today's show will be up there in a couple days. So if you need it or you want to share the show, you can always do it there. And guys, I'd appreciate that if you help me Pied Piper the show. We're always trying to grow the audience. And a question I get a lot is, can you help me in my town? And the easy answer is yes. If you can hear my voice, we could be your choice. So check out MrMortgageRadio.com. All our contact information is there, and we'll be happy to help any way we can. So let me throw it over to Jen for another question. Hey, Jen, what do we have?
Jeremy is asking, my mother lives with me. She is retired and gets Social Security only. Can she and my wife and I apply for a loan together?
Hey, Jeremy, that's a fantastic question. And we see a lot of that right now, multi-generational living. And, the parents have moved in with the children and the children are returning the favor by helping the folks out. And man, what an awesome position to be in to assist your mother if that's indeed the case. So, but to answer your question, yes, you can. The three of you can go on the mortgage together and purchase a property together, and it can be all three of your primary residents. And I'm making the assumption that that's the case for you. If I'm wrong, just shoot me back some additional info. But if the three of you are going to buy a house together and live together as your primary residence, the answer is absolutely yes. The three of you can go on the loan and go on the contract, own the home together. And she is perfectly okay using just the Social Security income to qualify. So assuming she qualifies, but the Social Security income is not a problem. But brilliant question. I appreciate it. If you need more info or I made an incorrect assumption with that being your primary, just call or text or shoot us some more information via email and I'll dive deeper with you. But great question. I appreciate that. Hey, Jen, do you have another one ready?
Brian sent this one. Can you explain how the Landlord loan works? I heard you mention it on your podcast, and it sounds like it may work for me.
All right. Thanks, Brian. Thanks for listening to the podcast. I appreciate that. And that's another plug for MrMortgageRadio.com. That top link there takes you to the podcast. And as I mentioned, Jen will post the recorded version of the show up there once we're finished. It usually takes a day or two, but it'll be up there. And you can check it out and be a podcast listener just like Brian. But thank you for that, my man. And to answer your question, the Landlord loan is a really, really cool loan product for people wanting to buy rental properties. So we're not underwriting your income as the buyer. We're using the income generated from the property. And it can be a straight rental property. It can be an Airbnb, but we're looking at the income the property generates to pay back the mortgage. And let's just use round numbers. And I know this mortgage doesn't exist anywhere but Fantasyland, but let's say you're buying a rental property in Fantasyland and the mortgage, including the taxes, the insurance, if there's an association fee, including that as well. Let's say the payment is $1,000 a month. Well, as long as the rent is $1,000 or more, you're good to go. That's a fundable deal. So we're looking at your credit, we're looking at your assets, and then the cash generated from the property. Another cool thing about that loan program is you can have 30 properties financed with a landlord loan, which is mind-blowing to me, but you can do 30 properties. And a lot of people will buy an investment property, go in and fix it up, increase the rents, which increases the value. They'll do a cash out refinance and then take that cash and go buy an additional property. You start that domino effect of building a rental portfolio by buying that first property, maximizing its value by increasing the rental income, pulling cash out and doing it all over again. And that's called the BRRRR strategy, BRRRR. I always sound like a seal when I do that. But there are 4 R's. So it's buy, rehab, rent, refinance, and repeat. And rehab's not always necessary, but you'll hear people refer to the BRRRR strategy, and that's what it is. Buy, rehab, rent, refinance, and repeat. And then you're playing with the house's money on the subsequent purchases after you pull the cash out. So brilliant strategy. It works really well with the landlord loan. We see a lot of people using it. So I hope that answered your question. I certainly do appreciate that one, and I appreciate you listening to the podcast. So thank you for that, Brian. Hey, Jen, do we have another question?
Joy has this question. My realtor is telling me buying with an FHA loan is going to be difficult. Are certain types of homes better for FHA? I don't understand why FHA is bad.
Hey, Joy, I don't either. It's not a bad loan. It should matter not to the seller of the property, assuming the property is a functioning property, right? The roof's not leaking. There's no exposed wiring. It's a safe property. If somebody's living in there now, it's likely that it's going to pass the minimum requirements for FHA. So that would be the only time an FHA loan might be an issue, is if you're buying a distressed property that needs a lot of rehab to make it livable. But this one gets me worked up because during the pandemic, a lot of agents were not wanting to fight for FHA buyers because the assumption was it's a difficult loan to close, or the buyer doesn't have a big down payment, or they have to go FHA because of a credit score issue. So comparing apples to apples, sellers were going with the path of least resistance. And that's really upsetting to me, because using an FHA loan doesn't mean you're a weak borrower. Sometimes there's a better interest rate. Sometimes it's a higher debt to income ratio that gets you qualified. And in my mind, as long as the loan's closable, the seller's going to get their cash. That should be all they're concerned about. Now, one caveat to that, some condo associations aren't FHA approved. And if that's the case, there's an additional hurdle, and not all condos are approvable. They're going to look at their budgets. They're going to look at the condo questionnaire, make sure the property's being managed well, that there's not deferred maintenance. There's no outstanding lawsuits. Not one owner has an unusually large number of units that they're renting out. So the condo association being approved might be one caveat for the FHA loan not being accepted. But by and large, it was a misconception that got spun out of control during the pandemic. And if your agent's pushing back on that, I would say get a different agent. And if you need a really great agent, hit realllygreatagents.com. That's realllygreatagents.com. And we'll give you a list of agents in your area who will go out there and advocate on your behalf, whether you're an FHA buyer or not. And we'll send you the agent's number. You're not going to get bombarded with phone calls. We'll send you their data, and you can contact them at your convenience. But no, I wouldn't shy away from using an FHA loan. And it just frustrates me to hear that that's still a misconception that's happening in the market. I'm happy to dive deep with you about that. If you'd like a conversation, just call or text 855-462-7292, and I can jump on the phone with you and maybe give you some talking points that'll help your agent off the fence. So anyway, brilliant question. I appreciate that. We saw a lot of that during the pandemic. People were taking the path of least resistance and assuming that FHA, VA, USDA borrowers were not a quote-unquote quality borrower, and they were getting pushed to the side. And that really boils my blood, because there's nothing wrong with the FHA buyer. There's certainly, if they're qualified, the seller's going to get their money, and that's all they should be concerned with. But anyway, you hear the music, you know what that means. That's my cue. We'll be back in a few. Sit tight. On the other side of this break, we'll be back with more of the show. Hey, it's Mark Eitel, host of the Mr. Mortgage Show, and I'm going to interrupt this commercial break to ask you for a favor. If you have any friends or family or coworkers who are thinking of buying or selling or refinancing real estate, I'm hoping I can count on you to introduce them to me, to the team, to the show. We'd love to help them any way we can. Just simply share the link, mrmortgageradio.com, mrmortgageradio.com. Again, it's Mark Eitel, NMLS 1929005. Now, back to the commercials.
Paradise is closer than you think. West Building Contractors can help you create your perfect piece of paradise. They have mastered the art of pavers, hardscapes, summer kitchens, pools, and more. For a free design consultation and quote, visit westbuildingcontractors.com or call 772-284-6994. West Building Contractors offer new construction, luxury additions, and remodels too. That's 772-284-6994 or westbuildingcontractors.com.
Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com, www.reallyGreatAgents.com.
Here's another 5-star review.
As a realtor, I have a bunch of mortgage brokers to choose from, but I prefer to work with Mark and his Mr. Mortgage team. In this crazy market, there is no room for error, especially on the mortgage side. Mark's team moves fast, keeps everybody in the loop, and makes things happen. They always give my clients a great deal and take the time to walk them through every step of the process. When you're considering a lender, I encourage you to talk to Mark Eitel and the Mr. Mortgage team.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right. My name is Mark Eitel, and you are listening to the Mr. Mortgage Show. And guys, we do this each week right here, same time, same station. Man, we love being on the air with you. And if you've got questions or comments, just call or text 855-462-7292. That's 855-462-7292, and Jen will get you on the air. If you prefer to send your questions via email, just visit mrmortgageradio.com. That's mrmortgageradio.com. Scroll all the way to the bottom of the page, and there you will find the email link. Just click on that, and then you can shoot your questions via email. So anyway, speaking of questions, speaking of Jen, let's throw it over to Jen for another question. What do we have?
Lisa sent in this one. We are selling in Fort Lauderdale, Florida, and moving to Sebring, Florida. How does homestead portability work? Thank you.
Hey, Lisa, thank you for that question. Man, that's going to be a culture shock, right? From Broward County to what? Sebring is what? Highlands County? I think it's Highlands County. But portability, awesome question. So when people file for homestead exemption, a lot of times they're disappointed because they say, okay, well, I get a $50,000 knock off my value, if you will, that saved me $300 a year or whatever the math works out to be. They're not that excited about it. It's not all it's cracked up to be. Well, there's another component to it called Save Our Homes. And in Florida, there's a cap on how much your property can appreciate if it's homesteaded. And that's the second part of it, which is Save Our Homes. And in Florida, it's a 3% cap. So listen, we just experienced crazy price doubling in a short period of time with appreciation. Well, your taxes would have done the same thing if you hadn't filed homestead exemption and been capped on how much your property can increase. So portability allows you to take the difference. Let's say your fair market value of your property is $500,000. And let's say you've owned it for a long time and your taxable value because of your cap is $300,000. So you've got a formula there, right? 3/5, I guess, is what you're being taxed on. A portion of that can come with you, and you can apply or port rather. You can port that over to the new property. And there's a form online. I'll post it to the Facebook group. I think you'll find it helpful. Go to mrmortgageradio.com, mrmortgageradio.com, click on the Facebook link, and I'll post the portability application there. It's a one-pager, and you'll file that with your homestead application in Sebring when you get the new house. So if you are buying now in 2023, you'll have to make that application by March 1st of 2024 because it's too late now for 2023. You could make it now, but the application, none of that's going to take effect until tax year of 2024. And I believe the cutoff is March 1st, and you would have had to occupy the property by December 31st of the previous year. So, but anyway, I hope you found that helpful. You're going to apply for homestead with the new county, and then you're going to, with your application, there's that portability form, and they'll probably help you with it. The Highlands County Clerk of Courts probably has it all on their website, but I'll post it to the Mr. Mortgage Facebook page also because I think a lot of people will find that useful. But you get to take a percentage of that savings with you. That wraps a lot of people around the axle when they buy a property. They'll look online and see the taxes of $1,000 a year, and then they buy the property and their first tax bill jumps to like $4,000 a year, and they're up in arms. Well, there's a very good chance that previous owner had the Save Our Homes cap in place, so their taxable value can't increase more than 3% a year. So that piece of homestead exemption becomes very valuable from a tax savings. And then when they enacted portability, you can, as long as you stay in the state, you can move a portion of that savings along with you. So I hope that's where you were going with the question. If you need more information, just call or shoot us an email, and I'll be happy to jump on the phone with you. But there is a one-page application form that you file with your homestead exemption form, and they'll port over a portion of your savings. So brilliant question. I appreciate that. Hey, Jen, do we have another question?
Jason sent this one. If I buy a house using the same agent as the seller, is it customary for me to get a discounted commission? That's a great question, Jason.
That is a great question. No. I understand where you're going, right? But there's no customary waiving or reduction of commissions. Now, that being said, everything in real estate, with the exception of taxes, is negotiable. So if you start the conversation with the listing agent, they may reduce their commission, but it's not, I don't know that it's customary, I guess is where I'm going with this, but anything is worth asking. And I guess, guys, I should probably explain for anybody who's confused how the real estate commission typically works. And again, guys, everything is negotiable. Nothing is standard across the board, but there are some instances that appear more often than others. And what typically happens is the seller agrees to pay a portion of the sales price as a commission, and then the listing agent agrees to pay a portion of that to the buying agent. So, just to use round numbers, again, everything's negotiable. I need to say that disclaimer. There's nothing standardized. But if the seller pays a 6% commission to their agent, the agent will normally pay half of that to the buyer side. So Jason is saying, if I'm not represented by my own agent, can I negotiate a 3% discount? And that's a conversation that you're going to have with the listing agent. I know a lot of listing agents aren't keen on that, but again, everything in this world is worth asking for. Just imagine where I'd be today if I hadn't had the courage to ask Mrs. Mortgage out for that very first date. So trust me, brother, anything worth having is worth asking for. So there's no harm in asking, but just know going into it that it's not a standard practice. You are going to have to negotiate it with the listing agent. But I get where you're going with that. I hope that helps. If any of my agent friends out there want to pipe in with answers that I can read on the air, just shoot them to me. I'll be happy to include your thoughts. But hey, Jason, thank you for that question, man. Best of luck in purchasing that property. Congratulations on finding something that meets your needs. And if we can ever be of any further assistance, call, text, or email us. We'll be happy to help. But hey, guys, you hear the music. You know what that means. That's my cue. We'll be back in a few. Sit tight. On the other side of this break, we'll be back with more of your questions. Hey, it's Mark Eitel, host of the Mr. Mortgage Show, and I'm going to interrupt this commercial break to ask you for a favor. If you have any friends or family or coworkers who are thinking of buying or selling or refinancing real estate, I'm hoping I can count on you to introduce them to me, to the team, to the show. We'd love to help them any way we can. Just simply share the link, mrmortgageradio.com, mrmortgageradio.com. Again, it's Mark Eitel, NMLS 1929005. Now, back to the commercials.
Paradise is closer than you think. West Building Contractors can help you create your perfect piece of paradise. They have mastered the art of pavers, hardscapes, summer kitchens, pools, and more. For a free design consultation and quote, visit westbuildingcontractors.com or call 772-284-6994. West Building Contractors offer new construction, luxury additions, and remodels too. That's 772-284-6994 or westbuildingcontractors.com.
Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com, www.reallyGreatAgents.com.
Here's another 5-star review.
My wife and I own a small business. And the way our accountant file our taxes, we don't show much income on tax returns. Because of this, it looks as if we don't make the money. This was a problem for our bank when we applied for a mortgage. But not for Mark. He verifies our income by using our monthly bank statements. Mark and his Mr. Mortgage team made a big difference for me. Yes, I am happy to recommend Mr. Mortgage Mark.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and you are listening to the Mr. Mortgage Show. And you're in the right place if you want the data, the tips, the tricks, the strategies, the inside information that you need so you can go out there and make better real estate and mortgage decisions for you and your family. As always, I am joined by my lovely producer, Jen, who will get your questions on the air. If you've got questions or comments, just call or text 855-462-7292. That's 855-462-7292. That is the Anytime Hotline. If you prefer to shoot your questions over via email, just go to mrmortgageradio.com, scroll to the bottom of the page, click the email icon, and you can shoot her your questions there. So, man, we've had some great questions so far. We covered a lot of good data. This show has been a blast so far. Let's keep it rolling. Hey, Jen, do we have more questions?
This one is from Michelle. We live on 22 acres and want to put a manufactured home on 2 acres for my daughter and son-in-law. Can they get a mortgage on the house if we give them the land? Great question.
Hey, that is a great question, Michelle. I'm going to make an assumption this is all predicated on that 2 acres, right? You said you got 22 acres. The 2 acres, if it's deeded as its own property, meaning it's its own lot, right? Because it's going to have its own parcel number. It can't be just part of your big property. If you can carve that out, or it already exists as its own parcel, you could gift that to your daughter and son-in-law, and then they can get a mortgage. That lot will become, that piece of property is now their equity necessary. They can finance the home purchase. And you said a manufactured home. So almost always the math will work out so that the home can be financed in its entirety with that lot being the equity. And, it would be a very rare exception that the lot was not worth enough to cover that minimum equity position. But that's usually how it works. If somebody owns the land, they usually have enough equity to finance the rest of it. But yes, to answer your question, that will work assuming that that parcel is already its own property, or you're able to carve it out of your 22 acres and get it deeded as its own parcel. That would be my only caveat. But that's a brilliant question. And congratulations on being in the position to help the kids out with their first house. So, hey, Jen, do we have another question?
Kyle is asking, what is the typical down payment required for a commercial office building?
Hey, Kyle, that's a great question. I need to know way more information, because if you're buying it for yourself, you may qualify for SBA financing. If you're buying it solely as an investment, then, think of somewhere around 15 or 20% down payment. But if it's going to be a building that you're going to occupy more than 51% of, then you could get an SBA loan with less than that for a down payment. But yeah, I would just need to know a little. I don't want to give you bad information, but if you're buying the property to hold it as an investment and just collect rent, I guess a good rule of thumb would be, 15 or 20% down payment. If you're going to buy it to occupy it, single user or more than 51%, there's a variety of SBA products that may be available to you that would require a smaller down payment. But I hope that helps, or at least gets you started down the path. If you need more info, just reach out and I'll be happy to jump on the phone and help you any way I can. But I appreciate that question. Man, you guys are bringing some great questions to the table today, not the run-of-the-mill standard stuff. Let's keep it rolling, Jen. What else do we have?
Sherry sent this. Which is a better long-term strategy for a lower rate, a buy-down or an adjustable rate loan?
Oh, that's a great question. Man, you guys are really testing the gray matter today. That's a tough one because it involves a crystal ball. If you believe rates are going to go down long-term from where we are today, then the adjustable rate mortgage will most likely save you money. And I say that only because people who bought properties with adjustable rate mortgages in, say 2005, saw their payments adjust downward after their fixed period expired. I'm thinking of one client in particular who had 5 years fixed and then 25 years adjustable on a 30-year mortgage. After that loan started to adjust, interest rates stepped down consistently over that period of time. Their interest rate went down. But if you think interest rates are going to go up from here, then the buy-down strategy may be the better bet. And when I say the buy-down strategy, I mean the permanent buy-down, because the 3-2-1 buy-down is only going to save you money for the first 3 years. If your strategy is shorter than 3 to 5 years, then maybe the buy-down works because you're going to save so much money on the front end. And just for anybody who may be scratching their head out there, the 3-2-1 buy-down temporarily buys the interest rate down 3% the first year, 2% the second, 1% the third, and then it sets back. So let's just say a 6.5% 30-year fixed rate would be 3.5% the first year, 4.5% the second, 5.5% the third, and then it's 6.5%. That saves a ton of money up front, and it never adjusts again. So in an increasing interest rate environment, the 3-2-1 buy down would make more sense. In a descending interest rate environment, the adjustable rate mortgage may save you more money long term. So without having my crystal ball out, dusted off, and Windexed really well so I can have a clear look at the future, I would lean on those two long-term insights. Brilliant question. I really appreciate that. Hey, Jen, can we squeeze in another?
Bob sent this email in. Is there a rule of thumb for calculating closing costs? I thought I was putting 5% down, but my bank is now telling me I'll need a lot more money out of pocket.
Hey, Bob, thank you for that, man. That is a brilliant question, and you are not alone in the confusion surrounding that one. So a lot of people find themselves wrapped around the axle because, you're approved for a 95% loan. You think you're putting 5% down, and then boom, here comes all these additional fees. So cash to close is made up of several buckets, if you will. One is the down payment, and then you've got your closing costs. And people have a tendency to just generically use that term, closing costs. Closing costs refers to like the transactional stuff, the appraiser, the title agent, all of the title exam fees, all of the transactional things that are involved in transferring the ownership from seller to buyer. And then there are state taxes. There are taxes on the mortgages. There are taxes on transferring the deed from one person to the other. Those are the state or the tax fees, if you will. Then you've got to prepay typically the first year's homeowner's insurance. That's a prepaid item. You're going to, in most instances, put a few months worth of taxes and insurance in an escrow account. Those are prepaids and reserves, or prepaids and escrows, depending on the terminology of your area. So all of that together makes up the cash to close number. That's what catches a lot of people off guard, is that larger number, if you will. So to answer your question, there's not a quote unquote rule of thumb, because things like property taxes, things like homeowner's insurance vary wildly by location. So insuring a $500,000 property in the hills of Arkansas is a very different cost than insuring a $500,000 property in Florida. Down payment is one bucket in cash to close. Prepaid items, that's another bucket. The transfer taxes, the state taxes, the governmental fees involved in buying and selling real estate is another bucket. And then the closing costs, if you will, are the transactional things. And all of those go into the cash to close bucket. So I know when it starts to get to the end of a transaction, it feels like there are lots of hands in your pockets and none of them are yours. So I understand the frustration, but I'm happy to help if you want to dive deeper on that. But great question. We've had some really good questions this week. But hey, guys, you hear the music? You know what that means? Wow, we have wrapped up another week here at the Mr. Mortgage Show. Where has time gone? We've had a blast with you. I know Jen's had a blast back there. She's on the phone right now, or I'd throw her the mic, but she is tied up. So, guys, I've got a favor to ask. If you've got any friends or family or coworkers who are out there thinking of buying or selling or refinancing real estate, I'm hoping I can count on you to introduce them to me, to the team, because if you can hear my voice, we could be your choice. We are serving all of the listeners of the show and happy to help any way we can. But other than that, we will be back next week right here, same time, same station. If you need us during the week, check out mrmortgageradio.com. That's mrmortgageradio.com. All of my info is there. Or you can call the Anytime hotline, 855-462-7292. That's 855-462-7292. Guys, have an awesome week. We'll be back next week, same time, same station.
That's a wrap. Join Mark Eitel next week for more thrilling, edge-of-your-seat discussions about real estate and mortgages, right here on The Mr. Mortgage Show.
Hey, it's Mark Eitel, host of The Mr. Mortgage Show, and I'm going to interrupt this commercial break to ask you for a favor. If you have any friends or family or coworkers who are thinking of buying or selling or refinancing real estate, I'm hoping I can count on you to introduce them to me, to the team, to the show. We'd love to help them any way we can. Just simply share the link, mrmortgageradio.com, mrmortgageradio.com. Again, it's Mark Eitel, NMLS 1929005. Now, back to the commercials. So you think interest rates have gotten too high to refi? Well, not so fast. There are several reasons people refinance. One is to lower their rate, that's for sure. But there are many other reasons. Debt consolidation, unexpected medical bills, home renovation. I even know of one guy who refinanced his house so he could buy his mistress a condo. But let's get back to debt consolidation for a minute. I'm working with a client now. His name is Ben. He's in Palm City. And Ben is going to refinance, pull some cash out, pay off 2 truck payments, as well as a host of credit cards. He's going to use a loan program called the REC Refi to reduce, eliminate, and consolidate his debt. So yes, his mortgage interest rate is going to go up a bit, but he's going to reduce his monthly expenses significantly. So if you'd like to learn more, tune in to the Mr. Mortgage Show every week right here on WPSL, Thursdays at 11 a.m. That's right, we're just before Clay and Buck. Or check us out online at Mr. Mortgage Radio. That's every Thursday at 11 a.m. right here on WPSL. Or you can find us online at Mr. Mortgage Radio. That's MrMortgageRadio.com.